All countries in the world are in debt. For example, the debt of the United States today has passed $38 trillion, and this is the highest number in its history. The debt of the European Union is over $14 trillion, and Japan is in third place with around $9 trillion. Even countries with a lot of oil carry serious debts. Now, a very simple but interesting question may come to our minds. If everyone has debt, then who is the creditor of this debt? Now pay attention, I will tell you the interesting side of it. Debt is actually not just a burden. The economic system of our modern world is largely built on debt. Wars, crises, economic growth. Behind all of these, there is debt. The even more interesting point is this. If you follow the chain of debt from beginning to end, you can notice that the world is not actually indebted to a specific person or a specific country. In a way, the world is indebted to itself. Of course, this does not mean that everyone earns equally. Today, the total debt in the world has passed $315 trillion. This is equal to about 3 times the size of the world economy. So how did we reach this situation? This story actually goes back several centuries. In 1694, England was at war with France, and the state's gold was almost running out. Then the king asked merchants for money. The merchants agreed to lend money to the state under one condition. They wanted interest payments from the taxes that would be collected in the future. The Bank of England was created to manage this system. This was a big innovation and change, because from that moment on, governments were able to spend money that they did not yet have, and they gave a promise to investors. We owe you money, and we will pay the interest. Over time, this promise turned into financial instruments that we now call government bonds. The modern financial system of the world actually started from here. Years later, other countries also began to apply this model. The Netherlands, France, and later, the United States. America used this system mostly to finance its war of independence and the growth of the country. Over the years, borrowing money was no longer seen as something bad. On the contrary, a country that could borrow money began to be seen as a trustworthy country. In history, empires used to conquer lands to extract gold and become rich. Today, countries raise money from investors by issuing bonds. 300 years have passed, and today debt is known as one of the biggest products in the world. The debt of the United States has passed $38 trillion. The European Union has more than $14 trillion, and Japan more than $9 trillion. And global debt continues to increase. But the same question comes to our minds again. Who gives this debt? Let us look at America. A large part of the U.S. debt is actually not held by foreign countries. Most of it is held by American banks, investment funds, and pension funds. So the biggest part of America's debt is owed to its own institutions and citizens. Yes, countries like Japan and China also hold U.S. government bonds. But this share is not as large as people usually think. In fact, the global system works in a similar way. Countries lend to each other, invest in each other, and buy each other's bonds. In reality, everyone is holding someone else's debt. You can think of it like this. It is like a poker table where players have borrowed chips from each other. As long as the game continues, there is no problem. But if someone stands up and leaves the table, the system may break. The most powerful players in this system are the central banks. To put new money into the market, central banks buy government bonds. This means that the liability of one institution becomes the asset of another institution. A large part of the money circulating in the economy also appears somewhere as debt. The main reason the system keeps running is that people believe governments will pay their debts. History has shown what happens when that trust breaks. Economic crises in Sri Lanka, Greece, and Argentina are examples of this. Debts became impossible to pay, interest rates increased, economy struggled, and serious social problems appeared. But the interesting thing is this. Even when the system collapses, it does not mean the system ends. Old debts are replaced with new ones. In today's modern economy, government debt is not designed to be paid off completely, but rather to be renewed again and again. New debts are taken to close the old debts of a government. In modern economics, this is called refinancing. That is why nobody expects the United States to completely eliminate its $38 trillion debt. Japan has also been renewing its debt again and again. So why do investors still lend money to governments? Because government bonds are considered one of the safest investments in the world. If one day the United States paid all of its debt completely, banks and investors would lose one of their safest assets. Such a move could create a serious problem for the global economy. For this reason, governments do not try to eliminate their debts completely. Instead, they try to keep them under control and sustainable. Politicians often say, "We will eliminate the national debt." It sounds good. But in reality, the goal of the system is not to fully pay off all debts. The real goal is to maintain the trust of people and investors in the system. Because without trust, interest rates rise, markets weaken, and the economy falls into trouble. Finally, one more thing should not be forgotten. In this modern system, the profits from debt are not distributed equally. Interest payments flow from taxpayers to investors. For this reason, as global debt increases, inequality can also increase. In short, the modern financial system works like a delicate balance built on debt. As long as this balance continues, the system continues. But if one day this balance breaks, we will remember what debt really is, a promise that cannot be kept forever.